This program is brought to you in association with First National Bank of Botswana.
Fnbb, how can we help you?
The impact of COVID-19 continues to be felt across various sectors of the economy as businesses face losses while also wrestling to stay in the market. The banking sector has not been spared. Financial Services news portal Market Research's Outlook states that Botswana's economic contraction weighed heavily on business activity, thereby hitting the banking sector in particular, with a drop in asset growth, lending activity and contracted profits. True to the statement, First National Bank of Botswana announced a 5% decline in profit at their full-year financial results announcement for the year ended 30 June 2020. This owing to the theme, Banking Sector, an ever-changing narrative, an ode to the challenging circumstances brought on by COVID-19. Tonight we're joined by First National Bank of Botswana's Chief Executive Officer Stephen Bogatsu, Chief Financial Officer at the bank Luke Woodford and Chief Economist Babole to speak on the bank's full-year financial results for the year ended 30 June 2020. Good evening and welcome to First Issues. First National Bank of Botswana is the largest commercial bank in the country, employing about 1,500 staff. The bank offers its services to more than 550,000 customers in 24 branches across the country. In spite of these figures, the bank was not immune to the negative impact of the pandemic, as evidenced by a contracted profit after tax. Exactly what economic conditions was the bank contending against that halted its long streak of positive results? First National Bank of Botswana's Chief Economist Babole joins us.
When you look at the economic outlook for this year, you've realized that a lot of the impact that we've seen playing out on economic performance globally, regionally, as well as in Botswana, has been the aftermath of the impact of COVID on the economies. The impact there being the disruptions to the supply side, as well as the disruptions to the demand side. On the supply side, with the impact of COVID, closure of borders, lockdowns, extreme social distancing, and closures of certain business activity, it has impacted the abilities of business to transact and trade as they normally do in the absence of COVID. And that's where the disruption has been, and trickling down to a limited investment expansion of businesses in the economy. In the same line, because of that impact, we've seen a reduction in the demand side. Lower economic activity resulting in loss of jobs in some instances, loss of wages in some instances as well, which then translates to lower consumption spending, lower than is usually the case. And then on the other side, when you look at the impact on government and government policies, is where governments had to react by putting in place fiscal packages to support the economies over this period, both with health-related costs as well as with fiscal buffers to assist businesses and households over these tough periods of lockdowns and lower business activity. So that has been the general impact of the economic environment that we've been operating in the past 6 months of the year, as well as expected to continue to have an impact in the remaining 6 months of 2020.
While First National Bank of Botswana contended in a less than unforgiving economic environment, its CEO Stephen Bogatsu and CFO Luke Woodford say they are happy with the results given these very challenging circumstances brought on by COVID-19.
We have seen an overall 5% decline in profitability this year. It has been a very challenging environment, but it satisfies me to say the first 9 months we were actually on target with our budget. It's only in the last 3 months, starting from April, for obvious reasons pertaining to COVID-19 lockdown, that we started experiencing challenges. The overall performance of a 5% decline was very, very satisfactory for us.
If I look at the bank's performance for the year, it really is characterized by a resilient performance amidst very difficult trading conditions. The COVID-19 pandemic globally disrupted supply chains and disrupted business. On the back of that, we have seen reduced volumes up until the end of June. But really, the bank has managed to continue with its strategy, to continue to roll out its digital banking strategy, to continue to invest, and to continue to really produce solid results. The reduction in profit after tax by 5% year on year is really driven through an impairment charge of 59% growth year on year. The basis of that impairment charge was just for the bank to be appropriately prudent given the turmoil that we're seeing in the economy. So on the basis of the additional stress that we're seeing both in the consumer and across most sectors of the economy, we re-looked at all of our credit parameters and ensured that we had sufficient provisions to take us through as we enter into a period of more turbulence, really. But strong results, so we've got interest income growth 2%, we've got a reduction on our interest expense as market liquidity has increased over the period. Then we've seen an 11% growth on our non-interest revenue with really good results coming out of merchant services, which is our point of sale devices. We invested in an extra 1,200 devices this year. So that infrastructure is growing. Our Cash Plus agents, we've got more than 100 Cash Plus agents where our customers are able to interact with the bank through new channels. And really, we've tried to invest in really smart places this year, and I think it's come together with a good set of results, although with a reduction on last year's performance.
As challenging as COVID-19 has been, it has also shown us other things of improving services, amongst them the importance of moving services from brick and mortar to online, which your competitors have done successfully, if I may say. So, as a bank that has been leading in the quest to move services from brick and mortar to online, what now sets you apart from your competitors?
We spent a very good portion of our 2020 strategy preparing ourselves for an environment of this nature. So if you remember our 2020 strategy, it was all about operational efficiencies, experimenting with a whole lot of things that were going to help our customers successfully migrate from the branches to digital platforms. So that's exactly what we will be focusing on. For 2025, we basically call digitization now on steroids. So that's precisely what we will be focusing on for the next couple of years.
Speaking of your 2020 strategy, one of the key points to that, or in that, was your customer centricity outlook, meaning that you're focusing on your customers to bring them better services. So looking at that and how COVID-19 has affected your customers, SMEs in this respect, how has the bank helped SMEs?
We have been putting in an enabling environment for all our customers. In particular, response to your SME question, what we have been doing is just ensuring that SMEs have the ability to self-service. We know that our branches for a very long time have actually been clogged, and we have put in place various developments around our platforms to make sure that we cater specifically for our SMEs. These platforms will enable our SMEs now to self-service 24/7 without the need for them to visit a branch. That is one. The second thing that we have done for some of our SMEs who have exposures with us is we have provided them with terms or holiday repayments to enable them to survive the current challenges that we are facing. And we appreciate that not all of them have emerged on the other side of the challenges of this pandemic. And therefore, we will continue looking at case by case on what sort of assistance they continue to need from the bank. We have also resourced the area around SME just to make sure that where some of the customers feel the need to come to the branch, they will be assisted adequately. But we do encourage our SMEs in order to make sure that the turnaround is a lot faster, to make use of our electronic platforms.
When running a business means
Where did I put that receipt?
we can help you with instant accounting, free software that does your bookkeeping for you. When running a business means
Wait, what do you mean the container hasn't arrived?
we help protect your business from risk with Fnbb Insurance. And when it means
How do we pay our staff that don't have bank accounts?
we help you make multiple payments directly to people's phones with e-wallet bulk send. At Fnb, we're constantly innovating to help business owners at every stage of their journey.
Welcome back to First Issues. First National Bank of Botswana's Chief Financial Officer, Luke Woodford, joins us now to talk about the cash management philosophy of the bank, especially during such unpredictable times as the one we live through.
The capital management philosophy of the bank is that we will maintain our capital adequacy ratio levels above the minimum requirements by the Bank of Botswana, as well as above our internal capital model testing. What this has done is this has provided us with a really good and strong base of capital going into the pandemic, which allows us in this instance to continue paying dividends. We're in a position, in fact, as a bank where we've got capital adequacy ratio of over 21%, which allows us to have debt capacity so we can lend more money into the economy to help stimulate growth.
Earlier, when COVID-19 made its way through our borders with Botswana's very first extreme social distancing, the bank introduced a financial relief program for its customers. Would you say this affected the bank's bottom line? And in the case where credit defaults occur, how is the bank going to recover its capital?
I think for me the most important thing for us was that we were able to help at a time when our customers needed. We were able to extend credit relief to customers in exposures with us in excess of 1.4 billion pula. At least 3,500 customers were helped through this program. And absolutely, we have to raise the appropriate impairments against that. The credit risk on that customer book did go up, and we raised the appropriate impairments, and therefore it did impact our bottom line. Really, that's the purpose of the bank. So we are meant to be stepping in and helping customers. And if that costs us a bit of money, that's fine. In fact, it actually turns out to be a win-win in this instance. So yes, on the short term, it costs us a bit of money with regards to the impairments. But as those customers recover and they use these relief measures that are in place, so it benefits the bank to have that loyal customer base as well as to be able to have supported the recovery of the economy. With regards to recovery, if as and when a customer goes into default, the bank in all aspects, we try to see how we can accommodate the customer, and if the fundamentals of their business are still sound, we do look to see if we can extend further measures to them or further relief packages to them to assist them through this difficult period. But really, we've just been privileged to be in a position to be able to help as we've had.
when running a business means
Where did I put that receipt?
we can help you with instant accounting, free software that does your bookkeeping for you. When running a business means
Wait, what do you mean the container hasn't arrived?
we help protect your business from risk with Fnbb Insurance. And when it means
How do we pay our staff that don't have bank accounts?
we help you make multiple payments directly to people's phones with e-wallet bulk send. At Fnb, we're constantly innovating to help business owners at every stage of their journey.
Welcome back to First Issues. We continue our conversation on First National Bank of Botswana's full-year financial results for the year ended 30 June 2020. We asked the CEO, Stephen Bogatsu, what the bank's overall outlook for doing business in the future is, past COVID-19 into the new normal that would soon present itself.
We have always remained very optimistic We expect that some of the challenges that we are facing as a country are temporary. They may be slightly longer, but they are temporary. Depending on which economist you listen to, recovery is expected to be any time between 18 and 36 months, because even after a vaccine is found, it's going to take a long time for things to get back to normal. But normal is not going to be the same normal as we have experienced in the past. So there will be an impact on the economy, but we do expect that there will be a recovery. Some sectors will take longer than others. There is absolutely no reason why sectors such as agriculture and probably pharmaceutical and health sector should not recover sooner. So we are expecting that there will be very good recovery. As we know, spring always follows winter. So the question is, as a country, how prepared are we now to take advantage of the new opportunities that are going to present themselves? It would be very, very amiss of us to miss out on the learnings that we have had to go through as a result of the challenges that we are seeing. And I believe that our strategy 2025, which hinges again on digitization, digital transformation for both our customers, for our staff members, for our ecosystem, will help us respond proactively to the challenges that will be post-COVID environment.
As difficult as this year has been, the future still awaits and demands new strategies and new ways of doing things. In preparation, what is Chief Economist Matludi Sebabele's anticipated economic outlook for the next 12 months and possibly further?
The one thing to note in terms of anticipation for the next 12 months, which essentially is the last 4 months of the year and the first half of next year, is that COVID is anticipated to result in a recessionary growth for this year, globally, regionally, and even for Botswana. What that means is we're anticipating that the global economy will compress by anywhere between a 4 and a 5%. The regional economy, being sub-Saharan Africa particularly, will experience negative growth, again around a 3% negative growth, while we anticipate that Botswana will record a negative growth of about minus 10%. So the negative growth is actually a result of the impact of COVID on disrupting the supply value chain or the production side of the economy, production coming from businesses, as well as the demand side, which is now the consumption side. Again, where businesses, individuals and government is consuming goods and services that are being produced. So that is the reason why we're actually seeing a convergence in growth dynamics. Unfortunately, this convergence being on negative growth territory for all economies or almost all economies in the world. So that's what we expect to actually see in 2020. If you look beyond 2020, the first half of next year or through to 2021, the expectation, however, is that we will start to see some clawback on growth or positive growth trajectory. The clawback, not necessarily that we're saying the vaccine for COVID will be found or things will be to the normal levels of 2019, but meaning that the economies of this world, including Botswana, will be operating under a new normal, a new different set of regulations and rules to operate business and to operate governments, which then would bring back some economic activity that was lost in 2020 as economies or governments were putting in place reactionary measures to deal with COVID. But the last point to note, however, is that even though we expect to start to see positive growth next year, for example, we anticipate that Botswana's positive growth will be around 4.5% in 2021. The reality is that even with that recovery in growth, we expect economies to take 2-3 years on average to return back to the growth levels they were at in 2019 before the start of COVID. So more weaker economies are expected to take longer, as long as 7 years to 10 years, to get back to the absolute level terms before COVID. In the case of Botswana, in our view, to take around 3 years to get to the 2019 levels in absolute pillar terms. So what it means is a lot of the recovery path and trajectory will depend massively on the use of the fiscal passages that are put forward. In the case of Botswana, the Economic Recovery Transformation Plan and the projects that it envisions and how those are able to recover growth in a much quicker cycle, such that it doesn't take us the 3 years that we envision, or even better. And we do way better than those that anticipated take 7 years to actually return back to the levels that they were at in 2019.